Welcome back to the channel, everyone. Today I want to talk about how Wall Street is lying to us and how there's a massive cover-up. This obviously builds on my video from yesterday. And I also want to talk about AMC's massive results that are going to be announced on Tuesday. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, I wanted to start with something really encouraging, and that's that DFV, or Deep Effing Value, or Keith Gill, is still in, he's still active, and he's awarding fellow apes. Now these two screenshots I'm about to show you were only taken a few hours apart. You can see both the awarder karma and also the awardee karma. So this is the karma that Keith Gill has received, and this is the karma that Keith Gill has given. In the first screenshot, we can see that Deep Effing Value has given 1,487,256 karma. In the second screenshot, it's 1,487,284 karma. So he gave an additional 20-ish points of karma over the course of a few hours. Now this means that Deep Effing Value is still active, he's still upvoting posts, and he's also still giving awards to the fellow apes. This is brilliant that Keith Gill is still in. He's still paying very close attention to subreddits like Wall Street Bets, Super Stonk, and potentially AMC stock as well. And now I also wanted to talk about if the economy is really about to crash, because if it was, why isn't it being covered in the news? So I wanted to talk on why Wall Street are lying to us and how they're covering it up. And as the poster says, the majority of things that have affected him is gas prices and groceries, and that's about it really. Now I think focusing specifically on the gas prices here, it's easy to see why the media doesn't report it. Now I don't think this applies so much in the US, but it definitely applies in the UK. Before the UK government announced a potential gas shortage or petrol shortage, everything was fine and everybody could go to a petrol station or a gas station like normal. When you got there, maybe there was 1 or 2 cars there filling up their tanks. But as soon as the UK government announced a potential gas shortage or petrol shortage, everybody and their friends was all going to the petrol station. When I tried to go and get some petrol, there was about 150 cars queued up outside the gas station. And that was the same at literally every single gas station around where I live. The minimum queue I could see was like at least 40 cars all queuing up to get some petrol because of the potential shortage. When the mainstream media announces something, it causes a lot of panic and makes things much worse than they usually are. And therefore, by the mainstream media not drawing attention to the potential market crash, it kind of avoids making it worse than it's already going to be. And I also wanted to thank you guys massively. You've been loving the content at the moment, and a lot of you have already signed up for Moomoo. Because of that, Moomoo have given me a special opportunity, and I'm one of only 4 YouTubers that have received this opportunity, all thanks to you guys. Moomoo's new massive promotion gives you 3 free stocks when you sign up and deposit at least $100. You get a free stock worth up to $350, you get a second free stock with a value approximated at around $54, and a third free stock of Neo with a value approximated at around $40, and this one's exclusive to my audience. You could always sell those free shares and get 3 entirely free shares of AMC just for signing up and depositing at least $100. But you have to sign up fast, as there's even less than 300 new shares of Neo left available. As somebody else here comments saying the same thing happened in 2008. The markets were setting record numbers and most of the media was saying it was going to get even better. Very few were warning about a crash, even though most experts knew one was coming. They sold their assets and waited while encouraging retail to buy. And somebody else commented saying that's exactly what I'm seeing as well. I've even heard brokers advertising on my local radio station, which is something I've never heard before. They know what's coming and they'll probably be shorting everything to make money off the back of this, whilst, like you say, encouraging retail to buy. And somebody else says, go look at the long puts on the market. That tells us everything about what the experts really think. Somebody says there's lots of long puts on Bank of America. Obviously, a put option is betting that something is going to go down in the future, and this suggests that there's a lot of long puts on many companies out there where experts are thinking that most of these companies are going to be going downwards in the near to medium term future. And I wanted to prove that and give you some actual evidence to support what I just said. Here's an article from August 2007 where Jim Cramer said to stop trading and to buy Lehman Brothers. Jim Cramer said the firings are good for the earnings and that Lehman Brothers is performing incredibly well. There's also a report here from Wachovia on the equity research standpoint for Lehman Brothers. Basically, a Lehman Brothers price prediction. This report was made on the 15th of January when Lehman Brothers was trading at $55.71. Wachovia said they basically see Lehman Brothers going to $71 to $72 per share, so gaining about 50% on its current value in the near future. They said that the CRE and CDS exposures seem manageable and that you shouldn't be concerned about the subprime real estate market. There's also an article here from Reuters talking about Lehman Brothers raising a dividend and setting share buyback targets. Basically saying that Lehman Brothers is performing exceptionally well. So well in fact that it can afford to buy back some shares. But obviously little did these articles know that in only a few months' time Lehman Brothers would be bankrupt. And this is exactly why the mainstream media and Wall Street isn't talking about how bad the market really is and how close to an economic collapse we really are. And now I also wanted to talk about AMC, and let's start by touching on an Ortex update. In my previous videos I've said to pay attention to this average age of shares on loan. At the moment it's 74.62 days, which again you can see here just behind the text box is reaching a new all-time high. This basically means that shorts are not opening new positions in large volumes. If they were opening new positions, you'd see the average age decrease because there'd be a lot of new shorts. What this is basically showing is that the shorts out there in the market right now are the old shorts from months ago, and there's very, very few new shorts that are being opened because this average age is increasing and not decreasing. And also because of the low volume at the moment, the average days to cover is very, very high and is also increasing rapidly. This is important to pay attention to because as the average days to cover gets higher and higher, it basically means that the shorts are stuck and it will be very, very difficult for them to get out and cover their position. Obviously, when the squeeze does start, we're going to see volume fly through the roof, and therefore the shorts will find it easy to cover their short position when the short squeeze starts. But at the moment, if a short wanted to cover now, if they wanted to cover slowly and not increase the price of AMC too much, it'd be very, very difficult because the volume is so low, and any buy orders they do make will have a massive impact in the AMC price. Now this screenshot here is a little bit blurry, but it basically combines the cycle theory with the fractal theory. At the moment there's many similar fractals playing out at the moment, as in September and October, as we saw back in April, May and June. These fractals are very, very similar, and even the price increases and price decreases are basically the exact same percentages. So far at the moment, we are tracking up to the 10th of May absolutely perfectly. It will be very interesting to see going forward over the next, say, 2 weeks, what happens to the AMC stock and whether we're on that same cycle or same fractal as we saw back in late May, early June. We should be seeing this week the break of $44, which will be very, very similar to the break of $10. Next week we should be seeing a break of $50, which should be the same as the $14 break that we saw back in May. If we do see that $44 and $50 break, I think we'll be on a very, very good track to be seeing the 60s and 70s and new all-time highs very, very soon over the next 2 to 3 weeks in November. I've actually been having a lot of visions and daydreams recently of what I'm actually going to do when the squeeze does start. A lot of you may know that I've been going into the office recently for my full-time job, and that's why on some days I do 2 videos a day, and on some days I only do 1 video a day because I'm in the office. I've basically been trying to think of what excuse I'm going to use when the squeeze does start to go home so that I can live stream all day for you guys. I have said it previously, but when the squeeze does start, I'm definitely going to be live streaming all day so that I can reassure all of you and keep you calm throughout the squeeze. And now I also wanted to talk about AMC confirming that October theatre admission revenue for AMC, both in the United States and internationally, is the highest it's been in any month since the pandemic forced the closure of theatres in early 2020. This is brilliant news because it looks like it's going to be another record-setting month for AMC. AMC's official earnings do come out after market close on Tuesday, so late tomorrow evening. When the final tickets are counted for showtimes tonight, the domestic industry box office for October 2021 is estimated to come in considerably higher than that of any previous month since February of 2020. So not only does it look like it's going to be a record-breaking month, but it looks like it's going to be a record-smashing month. Now I also wanted to give a bit of a wider market update, and HNA linked 245 Park Avenue files for bankruptcy in Delaware. Entities linked to 245 Park Avenue, a Manhattan skyscraper tied to China's HNA Group, filed for Chapter 11 bankruptcy, and therefore it even seems like Chinese real estate companies holding properties in America are also defaulting on loans and going bankrupt. Tax authorities in Chicago and New York City were listed as the two biggest creditors, where it owes more than $23 million in property taxes. So it looks like H&A didn't even have the money that they needed to pay the property taxes on these properties. 3 years ago, H&A listed the Manhattan property among the assets it was putting up for sale, as it marketed more than $40 billion of its holdings to cut its debt load. At the time, the building was valued by the company at $2.21 billion. This obviously goes to show that this Chinese property sector collapse isn't a brand new thing that's popped out of nowhere. It's actually been going on for many years already. And finally, similarly, it also looks like Australia is also not in a great position at the moment either. You can see the Australia bond yields for today were down 7.7%, down 9%, down 8%, and down 5% for the 10-year bond. Now this is just the trading volume for one day on Monday, and it does not look like Australia is doing too well either. It looks like these bond yields are having a global impact in the US, in China, in Australia, and in many other countries as well. And it says the bond market's discovered risks and it's likely to play out for a while. Guys, be sure to let me know down in the comments below what you think about the upcoming market crash and the media covering it up. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers. And if you haven't already, be sure to sign up to Moomoo using the link in the description down below to get those 3 free shares, because at the end of the day, everybody loves free money.